to Midcap Radar on CNBC TV 18. We are focusing on Filatex India. The company reported a weak quarter with an over 60% drop in profits, and high raw material prices and expenses weighed on margins as well. The company is a manufacturer of polyester filament yarn and makes polyester chips and narrow woven fabrics, among other products. To discuss what went wrong in Q2, but most importantly, what is the outlook going forward, we are now joined by Madhusudan Bagheria, who is the chairman and managing director at the company. Mr. Bagheria, good afternoon. Thanks a lot for joining us. Well, Q2 did see an impact. You have listed things like there was a lot of dumping by Chinese players as well, and there was an impact on margins as well. Going forward in Q3 and Q4, what kind of outlook do you have in terms of demand and in terms of raw material pressures as well?
Yeah, good afternoon. There is a dumping from China, and the reason for dumping from China is basically China has adopted a zero COVID policy, and because of that, they are having huge lockdowns throughout their country. So their internal consumption has gone down drastically, but their production, they have not dropped to those levels. So the producers are trying to dump wherever they find a market. And to stop that dumping and the goods coming to India, we have to drop our prices. So there is a growth in the volumes in this quarter. We have volume growth is almost 22%, but the margins have dropped drastically because we have to compete with the imports coming from China. And I think third quarter would remain maybe similar or slightly better. From fourth quarter onwards, once Chinese have their new year in early Jan, after that, I think they should open up and their consumption and everything should start. Also, they are also contemplating reducing their capacity. Even after dumping all over the world, they are not able to release the pressure because already they are almost 75% of the world production in polyester filament yarn. So by dumping also, they are not able to release. So they are hardly able to sell 3 to 4% more by dumping. So I think they have realized and they are resorting to production cuts. So that will help in improving the margin. The good thing is that there is a lot of appetite in the downstream because even in spite of dumping from China, we have been able to sell our full of production. And also our exports have gone down because they are dumping everywhere in the world. So we are becoming uncompetitive in the world. So even that volume, the Indian downstream is able to absorb. So there is a good demand in the downstream. So as and when these things gets corrected, I think the margins will jump up. So hopefully fourth quarter should be better. And once China opens up, then FY24 I see to be back to normal year.
Okay, that's the hopes. We don't know if China is going to open up in Q4 of FY23, but we take your point. Could you tell us what are the current prices of polyester filament and how much lower would it be compared to, say, same time last year or compared to pre-COVID levels?
See, our prices depend on the raw material prices, so I can tell you about the margins. So our margins, EBITDA used to be around 14-15% or 15 rupees a kg, has come down to almost like 5 rupees a kg. So we have dropped our margins by almost 10 to 11 rupees a kg. So that is the situation.
Okay, and is this confirmed that China is going to be bringing down the production, lowering their capacity, or is this just the hope?
I think they will be lowering their capacity because even after dumping everywhere, they are not able to still sell more. And because otherwise they were always selling 85% of their product in the local market. The exports were hardly 12 to 15%. So they have not been able to substantially increase that market share in the export even after dumping. Because already they were catering almost 80% of the export market.
Mr.
So it is not helping them. They have tried it and now they are cutting down the production. So I'm sure because they have a financial year ending in December. So after December, they would cut down on the production drastically. And also Chinese New Year is approaching where they normally cut down good production volumes.
Okay, so that is something we'll watch out for. In terms of your capacities, I was looking at your investor presentation. You have annual production capacities of 4,01,040 tons. That is post expansions in FY23. So how much additional capacity is coming on stream? And what is the current capacity utilization with the newer capacities? What could the initial capacity utilization be according to you?
See, this capacity has come in stream somewhere in September this year. So we have added around 3,000 tons more this year. We had a capacity of roughly 360,000, so we added another 43. Our capacity utilization is onwards of 95% in yarn. Now we are not selling any chips anymore. So 100% we are converting to yarn in-house. So we are out of the chips market. And capacity utilization for the old is almost close to 100%. The new one we are doing around 85 to 90%.
Okay. 85 to 90% in the newer capacity. All this was... Go ahead.
No, just wanted to get a sense then on the top line, or even in terms of volumes, if you could give us a picture. You said the volume growth in Q2 was about 42%, right? We
no,
do not...
22%.
42, right?
22.
22. Okay, 22. Is this the volume run rate which should, continue in Q3 and Q4?
Yeah, it would be very similar in Q3 and Q4.
All
okay.
right.
Got it.
Okay. Can you give us a sense of what is the total contribution from value-added products? Do these come in at a higher margin? And going forward, since we are looking at the pricing differential because of dumping by Chinese markets or Chinese players, will you keep increasing this particular percentage and that in turn will improve your margins?
Yeah, we will keep increasing. Right now, we are not increasing, but we have some plans which will get crystallized in FY24. So we will add more value-added products by then.
But how much is it right now as a
right now as a percentage, we should be around close to 70% in the value-added products.
70%.
70.
Okay.
Okay. So you also have cash of about 240 crores on your books. Could you tell us what the plans are? Because you already have a capex which you have initiated and is close to completion. So what is the plan with respect? Yeah.
We will retire some debts as of now, and we need to do a capex on our recycling, which we are developing, the recycler technology which we are in-house developing. So we will commit a capex for that maybe by the FY23 end. So we are conserving some cash for that also.
What is the debt on your books and how much do you want to bring it down? And any number on the recycling capex which you're planning?
I think recycling capex would be close to 200 crores.
Okay.
And we will bring down below or around 300 crores of total debt to around 300 crores.
Okay. So recycling capex at around 200 crore rupees and debt would be around 300 crore rupees by the end of this year.
Right.
Last question before we let you go. What is the percentage of exports in your total revenues? And export markets, you did indicate about how they are doing. You expect it to improve?
It all depends when China will improve, but right now their prices are so low that we can't meet the export price expectation. So exports we used to do around 30 to 15%, and in this quarter we have only been able to do 3.5–4%.
Okay. All right, Mr. Bhageriya, thank you so much for joining us and explaining the industry setup, how it's impacting players like yourself. So China dumping is something which is hurting realizations. Demand, though, continues to be really strong. A quick programming note: to fully commit to the cause of bridging the gender